Welcome back. Kumba Iron Ore's profits have tumbled during the half-year period. Headline earnings per share fell 26%. This as the miner had to deal with lower iron ore prices and logistics issues at Transnet. This further resulted in a lower payout, with the interim dividend down 17% to 18.77 rand. Joining me now as we dig deeper into those numbers is the company's CEO Mpumi Zikalala. Thank you so much for your time, Mpumi. Now let's actually start off with the softening of your bottom line. I do believe that the main culprit is the strong pullback in pricing in the iron ore market. Just talk to me about the dynamics of this too much supply with less demand scenario.
Thanks, Zinati. So yes, the biggest impact was driven by the weakness in the markets, primarily driven by China, where we saw weaker domestic demand. And that's clearly driven by the weaknesses that we've seen from a property market perspective. And even with the stimulation measures that have come into China, we haven't really seen that demand pulling through. What, however, happened is that the mills continued producing, and they essentially increased the exports out of China into other markets from a steel perspective. What do we expect to see going forward? For the remainder of the year, we expect to see prices subdued at current levels, where they are currently sitting, just over $106 per ton. But we do know that our industry is cyclical, so that demand will come back. The other thing that impacted pricing for the first half is the fact that clearly supply did continue coming through. The slight reductions that we typically see in supply coming out of the weather challenges that we see in Brazil during the first half of the year did not materialize this year, and that fed into the pricing that we've essentially seen for the first half.
It's actually quite interesting because, we've been talking about the headwinds in China, particularly coming from the property market. And it would seem, as much as, it is a cyclical industry, it would seem that these issues, they are really structural, and they're going to take a long time to actually be alleviated there. And I'm wondering then how is Kumba looking at the market in terms of maybe trying to de-risk from China, if you're seeking opportunities outside of China?
So if you look at our business, Zinati, we always talk about the 50-50 split in terms of production that would be sold to the Chinese market and production that would be sold ex-China. And for us, that includes the likes of, Europe, Japan, and South Korea. And we've certainly seen that split. For the first half, 55% of our sales went towards China and 45% went towards the other areas. But more so, when it comes to us as a business, we fundamentally focus on the production of high-quality iron ore. Because what we also look at is the essence of the additional premiums that we get by virtue of the quality of our product. And that's essentially premiums above the Platts 62 index. And we also produce lump, which clearly is something that others desire, primarily those that are interested in decarbonization. And going forward, that will continue assisting us as Kumba. And that's how we differentiate ourselves. And we always show our product relative to our competitors who are bigger when it comes to scale. But certainly the quality of our product is far much better than theirs. And we'll continue doing that.
All right. Well, you talk about quality, but let's actually go into quantity, because you are in the middle of the reconfiguration plan where you've had to reduce your production to kind of align with the headwinds that we are seeing on Transnet. Obviously, we know about the failures there in transporting, the iron ore. But you really have managed that really well. But also, how ready are you to pull levers to increase production when Transnet does actually get better?
Yeah, we certainly had to reconfigure our business in line with the challenges that we've seen. And we announced that towards the end of last year, and we've spent the first half of the year executing that. And I am proud of my team, because even with the challenges that we've been dealing with, they're fundamentally focused on driving efficiencies. And the results that you see in terms of the cost out product, the cost out element, which has resulted in circa 1.9 or 1.8 billion rands of value, has actually come from them. What we have focused on as we've reconfigured the business is the essence of retaining optionality.
Okay.
And even though in our guidance, we've said that we've guided for our sales to be at circa 36 to 38 million tons for the next 3 years, we've catered for the scenario of the turnaround being much faster, and we know exactly how we will make sure that we never ever miss a train in that scenario. But we did need to reconfigure the business because clearly we had gone through the challenges for a slightly longer time, and we couldn't really continue producing at over 40 million tons, knowing that we weren't able to sell that. And we did find ourselves, particularly at the end of the third quarter, sitting with 9 million tons worth of product stockpiles, and we literally had nowhere else to go with regards to that. And that's why we needed to reconfigure.
All right. It's quite encouraging to see that obviously you've catered for the position of optionality, but also kind of catering to a turnaround that might be faster on Transnet. But I guess also it does sound a little bit too optimistic. I do know that you are engaging with government and Transnet. How are things looking on that front?
I have to say, Zinati, you know, in as much as we are in a challenging space around Transnet, clearly we know that the challenges, you know, they didn't just happen yesterday. They took a little bit of time. And as a result, it will take a little bit of time to drive for the full turnaround. What's pleasing for me are two critical elements. One is from a Transnet leadership perspective, the new leadership that came in from around October last year in an acting capacity, and clearly that led to the actual appointments, is really engaging. They are open and very transparent around the challenges. You know, if I look at things such as the independent technical assessment that's happening in the iron ore export channel, it's being done with them as well as the other users of the line. And there's no filtering of data. And that then allows us to drive for mutual collaboration around the actual implementation of the critical work that needs to come in. That's the first thing that encourages me, because when there's transparency and openness towards collaboration, we all know what it is that collaboration between the public sector and the private sector can drive. The second element is that from a government perspective, we are part of the National Logistics Crisis Committee. And the key thing for me is that the essence of the drive for policy reforms is certainly coming through. We saw the freight logistics roadmap being approved towards the end of last year. And even with the new transport minister coming in, Minister Barbara Creasy, we've already heard her talking about the fact that the implementation of policy reforms needs to be expedited. And that's what we are focusing on. It's the essence of saying, you know what, we know the challenge. We've spoken about the challenges. The key is, how do we expedite the resolution of the challenges, understanding that this won't just be good for Kumba, it will be good for our country as a whole. And for us, we always look at our communities within the Northern Cape, because that's the area that we call home. That's where our operations are. And we know that when we are successful, then they are also successful. And that's why we are so passionate about the essence of collaboration.
All right. Well, thank you so much for your time. We do have to wrap up the conversation there, Mpumi, but appreciate just basically your insights on Kumba's operational performance, also the iron ore market, and also the conversations that you are having with the government and Transnet. That was the CEO of Kumba Iron Ore, Mpumi Zikalala.